Okay, venture capital. We should know what it is by now. It is investing in new companies and helping them to establish themselves. But even within that very niche and focused area, you have different types of investments. So early stage, pay attention, just be aware we're looking here at early stage forms of VC financing. Earliest you can get, pre-seed capital, might not even exist. All right, this is super sort of frontier of VC investing when there isn't really even a company yet. Remember, the company starts existing when we seed it here at seed capital. So these hundreds of thousands of dollars for a relatively small stake, these would be provided by usually founders, friends and fools, the 3 Fs as it was usually called. But VCs are increasingly taking more risk, increasingly moving earlier and earlier. And they could be interested in this pre-seed capital even when, it doesn't always happen. That's why there's a question mark there. Use of funds, just coming up with an idea or exploring an idea. Seed capital is where we've got an idea and we're starting up the company for sure, okay? So there'll be millions here for a 15 to 20% stake, so a significant minority stake. Developing a product, thinking about customers, testing the product in the laboratory but not sending it out yet. That's what alpha testing is. And developing the business plan, okay? So that's setting the company up as a commercial entity. If it works, once we've got a completed beta tested product, it's been out with customers and we've got feedback and we feel like we've completed that beta testing. It's interesting, the way they phrase beta testing in the text, they say it's completed by a Series A round of financing, which comes later. So that would suggest it's going on once we've been seeded, but before we've raised a Series A round of financing. Series A is the first follow-on round of financing. Seed capital is the first proper form of early stage financing for a VC. Pre-seed capital may or may not have occurred from friends and family and so on. So here we've got a product. We've completed the testing. Beta testing means it's gone out to customers. We've got a customer. We've got customer revenues being generated, and so we build our manufacturing capacity, management sales teams, we refine the business plan, and we start generating revenues here. The beta testing, we might not be generating revenues in response to feedback from potential customers. When you raise financing here, 5 to 10 mil for a 10 to 30% stake, sometimes you just got to take on board the heavy lifting of remembering these numbers. 5 always seems to be a crucial number in it, so you can usually take 5 as a cutoff somewhere along the line. Angel investors, these will be investing alongside VCs. These are private entrepreneurs that they know how to set up successful businesses because they've done it themselves, and they're wealthy because of that as well. So they invest in early stage opportunities and help companies to establish themselves. Later stage is follow-on financing after Series A, and that's where really the company has proven itself. But it's got significant working capital needs. Working capital is your current assets minus your current liabilities. We need cash. We need to build up our stock because there's huge demand coming from our customers, causing this huge expansion. We're getting close to profitable, but we're burning cash, so we need to raise more money. You could be preparing for an IPO as well. If an IPO comes quickly, if you stay private, you're going to move into growth equity in terms of your classification. The amounts that are raised here are